On February 28, 2022, 4 days after Russian tanks rolled into Ukraine, the United States Treasury Department made a decision that will be studied in history books for the next century. Not the SWIFT cutoff. Everyone talks about SWIFT. I'm talking about something bigger. Something that happened with far less media attention but infinitely more consequence. The US government, along with the European Union, Japan, and Canada, announced the freezing of $300 billion in Russian central bank reserves. $300 billion. Money that Russia had accumulated over 2 decades of oil and gas sales, stored in Western banks, in Western bonds, in Western financial institutions, gone, not destroyed, not lost, simply frozen, and accessible. Russia's central bank went to withdraw money to defend the ruble, to stabilize the economy, to prevent collapse, and the accounts were empty. The Western powers celebrated this as the ultimate sanction. The nuclear option of economic warfare. Russia would be crippled. Putin would face revolution. The war would end within months, but 3 years later. Russia's economy is growing faster than Germany's. The ruble is stable. Russian oil exports hit record highs, and the $300 billion freeze didn't force Russia to surrender. Instead, it forced the entire world to ask a single terrifying question. If the United States can freeze $300 billion of Russian money with a conference call and a press release, what stops them from freezing my country's reserves tomorrow? That question changed everything. Because here's what nobody understood in February 2022, the $300 billion freeze wasn't a weapon used against Russia. It was a weapon used against the dollar itself. It destroyed 80 years of trust that made the dollar the world's reserve currency. It triggered the largest and fastest shift away from dollar reserves in modern history. And it handed China, America's main rival, the exact blueprint for replacing dollar dominance without firing a single shot. This wasn't just a policy mistake. This was financial suicide. And the crazy part, it followed the exact same pattern that destroyed British pound dominance 80 years earlier. The same 5-stage pattern, the same miscalculations, the same backfire. And just like Britain took 30 years to lose reserve currency status after weaponizing finance in 1914, the data shows America has about 20 years from 2022. That puts dollar collapse somewhere around 2042, maybe sooner. Because this time technology accelerates everything and alternatives already exist. Let me show you exactly how this happened, why it's irreversible, and why your dollar savings are worth less every single day because of a decision made in February 2022 that almost nobody understood. Before you hear this story, I need you to do something. Hit that subscribe button right now and turn on notifications, because what I'm about to show you isn't covered in mainstream financial media. This is pattern recognition across a century of financial history, and if you understand these patterns, you'll see the next 20 years of economic reality before it happens. Also, drop a comment below telling me where you're watching from and what time it is right now. I want to see how global this audience is. Because what's happening to the dollar affects every person on Earth, no matter where you live. Alright, let's dive in. To understand why the $300 billion freeze was catastrophic, you need to understand what reserve currency status actually means and why it is the foundation of American power. The dollar being the world's reserve currency means that central banks around the world hold dollars as their savings. When China earns money from selling products, when Saudi Arabia earns money from selling oil, when Germany earns money from selling cars, they don't keep that money in yuan or rials or euros. They convert it to dollars and store it in US Treasury bonds. Why? Because for 80 years, the dollar was considered the safest, most stable, most liquid currency on Earth. The US had the largest economy, the strongest military, the deepest financial markets, and most importantly, the rule of law. Property rights were sacred, contracts were honored. The US government would never simply confiscate foreign assets for political reasons. That was what dictatorships did. That was what banana republics did. America was different. America was safe. This trust created a massive structural advantage for the United States. Because the world needed dollars, the US could print unlimited money and export the inflation. The US could run trillion-dollar deficits every year and foreign countries would buy the debt. Because they needed dollars for trade, the US could borrow at artificially low interest rates because treasury bonds were the global safe haven. This is called exorbitant privilege. And it's worth trillions of dollars per year to the American economy. But exorbitant privilege only works as long as the world trusts that their dollar reserves are safe. The moment that trust breaks, the entire system collapses. And on February 28, 2022, the United States government shattered that trust permanently. Here's what actually happened. Russia invaded Ukraine on February 24th. Within 48 hours, the US and EU announced that Russian banks would be cut off from SWIFT, the international payment messaging system. This got all the headlines. But the real weapon was deployed 4 days later. The US Treasury announced that Russia's central bank reserves, held in dollars, were frozen. The Bank of England froze pound reserves. The EU froze euro reserves. Japan froze yen reserves. Out of Russia's total $630 billion in foreign reserves, approximately $300 billion held in Western currencies was suddenly inaccessible. Russia couldn't use it. Russia couldn't withdraw it. Russia couldn't sell it. The money was simply gone. Now, you might be thinking, so what? Russia invaded a country. They deserve punishment. And maybe you're right about the morality, but I'm not talking about whether the sanctions were morally justified. I'm talking about whether they were strategically smart for American interests. And the answer is absolutely not. Because here's what every other country with dollar reserves immediately understood. Their reserves weren't safe either. Think about it from China's perspective. China holds about $3 trillion in foreign reserves. About $800 billion of that is in US Treasury bonds. China isn't at war with anyone. China hasn't invaded any neighbors recently. But China and the US have tensions over Taiwan. What if those tensions escalate? What if there's a crisis in the Taiwan Strait? Could the US freeze China's $800 billion in treasury holdings the same way they froze Russia's reserves? Before February 2022, that seemed impossible. The US would never weaponize the financial system against the world's second-largest economy. It would destroy global trade. It would crash the US economy. It would trigger World War III. But after February 2022, it didn't seem impossible anymore. It seemed inevitable. The precedent was set. Reserves could be frozen for geopolitical reasons, and if it could happen to Russia, it could happen to anyone. China looked at that $800 billion sitting in US Treasury bonds and saw a loaded gun pointed at their head. The trigger might never be pulled. But the gun was there, visible, undeniable, and China has spent the last 3 years systematically reducing that vulnerability. The same calculation happened in dozens of countries. Saudi Arabia, a US ally for 80 years, saw the reserves freeze and thought, what if we have a dispute with Washington over oil production? Could they freeze our sovereign wealth fund? India saw it and thought, what if we buy too much Russian oil and the US decides to punish us? Brazil saw it and thought, what if we elect a leader Washington doesn't like? None of these countries are enemies of the United States. But all of them recognized that dollar reserves had transformed from a safe haven into a geopolitic weapon that could be deployed at any moment for any reason Washington deemed important. This is the critical insight that US policymakers completely missed. They thought the $300 billion freeze was a weapon aimed at Russia. But the message the world received was completely different. The message was, dollar reserves are not safe, diversify immediately. And that's exactly what happened. Let me show you the data because this isn't speculation, this is fact. In 2021, before the Russia sanctions, the dollar's share of global central bank reserves was 59%. By the end of 2024, it had fallen to 58%. Now, 1 percentage point doesn't sound like much, but we're talking about a system with about $12 trillion in total reserves. 1 percentage point is $120 billion that shifted out of dollars in just 3 years. But the real story is in the acceleration. From 2000 to 2021, the dollar's share of reserves fell about 1 percentage point every 4 years. Slow decline, but manageable. Since 2022, it's falling 1 percentage point every 18 months. The rate of decline doubled, and it is accelerating further in 2024 and 2025. Central banks around the world are dumping dollars at the fastest rate in recorded history. China reduced U.S. Treasury holdings from $1.3 trillion in 2021 to $775 billion by late 2024. That is a $525 billion reduction in 3 years. Japan, America's closest ally in Asia, reduced holdings from $1.3 trillion to $1.1 trillion. Brazil cut holdings by 30%. India cut holdings by 20%. Even European countries are quietly diversifying away from pure dollar concentration. So where is this money going? 3 places: gold, yuan, and alternative currencies. Central bank gold purchases tell the story most clearly. In 2021, central banks bought about 450 tons of gold. In 2022, they bought 1,136 tons. In 2023, 1,037 tons. In 2024, over 1,000 tons again. This is 3 consecutive years of over 1,000 tons of gold purchases. To put this in perspective, from 2010 to 2021, annual purchases averaged around 450 to 650 tons. Suddenly in 2022, it more than doubled. Why? Because gold can't be frozen. Gold can't be sanctioned. Gold doesn't have a central authority that can cut you off. If you hold physical gold in your own vaults, it's yours, period. No U.S. president can sign an executive order freezing your gold. China is leading this trend. Official Chinese gold reserves are reported as 2,264 tons. But analysts believe the real number is between 4,000 and 6,000 tons because China has been buying gold through unofficial channels to avoid moving the market. Russia increased gold reserves from 1,500 tons in 2021 to 2,300 tons by 2024. Turkey went from 400 tons to over 540 tons. India increased reserves by 200 tons. Poland, Czech Republic, Singapore, all buying gold at record rates. These aren't random central banks. These are countries that saw $300 billion frozen and decided physical gold was safer than dollar promises. This is a direct response to the reserves freeze. The causation is obvious. The second destination is the Chinese yuan. Now, the yuan isn't freely convertible like the dollar. It's not as liquid. It's not as trusted. But it has one massive advantage right now. China isn't freezing anyone's reserves. China needs countries to hold yuan. So China is making yuan reserves as attractive as possible. China offers currency swap lines, yuan-denominated loans, yuan payment systems through CIPS, and most importantly, China is settling trade in yuan. Russia-China trade hit $240 billion in 2023. Almost entirely settled in yuan and rubles, $0. Russia-India trade, $65 billion. Largely in rupees. Saudi Arabia now accepts yuan for oil sales to China. This breaks the 50-year petrodollar monopoly. UAE accepts yuan and dirhams. Brazil and China settle in local currencies. The BRICS nations: Brazil, Russia, India, China, South Africa, plus new members Saudi Arabia, UAE, Egypt, Iran, and Ethiopia, are building alternative payment infrastructure explicitly designed to bypass the dollar. They're developing a BRICS currency, a payment system that rivals SWIFT, and commodity-backed currency arrangements. All of this was discussed before 2022. But it accelerated dramatically after the reserves freeze. The freeze was the catalyst that turned talk into action. The third destination is alternative reserve assets: the euro, the yen, the Swiss franc. These aren't perfect substitutes for the dollar, but they're not controlled by the U.S. And that makes them safer from U.S. sanctions. Central banks are spreading reserves across 5 or 6 currencies instead of concentrating in dollars. This is diversification driven purely by fear. Not fear of dollar collapse. Fear of dollar weaponization. And here's the vicious cycle that's now unstoppable. As countries diversify away from dollars, demand for U.S. Treasury bonds falls. As demand falls, the U.S. must pay higher interest rates to attract buyers. Higher interest rates make the U.S. deficit more expensive. The deficit grows. The U.S. must issue more bonds. More supply meets lower demand. Rates go higher. Foreigners diversify faster. This is a death spiral, and it started in February 2022 when the world saw that dollar reserves could be frozen. Now, let me show you the historical parallel because this exact pattern destroyed British financial dominance 80 years earlier, in 1914. Britain was the world's financial superpower. The British pound was the global reserve currency. The City of London was the center of world finance. About 60% of global trade was invoiced in pounds. Britain held about half of all foreign investment on Earth. This was the foundation of the British Empire's power. But when World War I started in August 1914, Britain made a fateful decision. They passed the Trading with Enemy Act, which allowed the British government to seize assets of German nationals and businesses throughout the British Empire. German companies lost property, bank accounts, investments, everything. Britain celebrated this as economic warfare that would cripple Germany, but neutral countries watched and learned a terrifying lesson. If Britain could seize German assets, they could seize anyone's assets during any war Britain deemed important. Your money in London wasn't safe unless your country aligned perfectly with British foreign policy. After WWA ended, neutral countries began diversifying reserves away from London. They moved money to New York, to Paris, to Zurich. They increased gold holdings. The U.S. benefited enormously. American banks gained business that previously went to London. By 1920, the U.S. held more gold reserves than Britain. By 1925, New York rivaled London as a financial center. By 1944, at the Bretton Woods Conference, the dollar formally replaced the pound as the world's reserve currency. Britain's weaponization of finance in 1914 started a 30-year decline from dominance to irrelevance. The pattern was identical to what's happening now. Stage 1. Britain controlled the global financial system. Stage 2. Britain weaponized it against Germany. Stage 3. Germany found alternatives and neutral countries diversified. Stage 4. The alternative system, centered in New York, scaled rapidly. Stage 5. The pound lost reserve status. The entire cycle took 30 years, 1914 to 1944. Now, the U.S. weaponized dollar reserves in 2022. If the pattern holds, the dollar loses reserve status by 2052. But I actually think it'll be faster, maybe by 2042. Maybe even 2037, for two reasons. First, Britain's decline was complicated by two world wars that devastated their economy. The financial weaponization alone didn't destroy the pound. It was weaponization plus economic collapse from war. The U.S. isn't fighting world wars that destroy the homeland economy, so the decline should be slower. But second, modern technology accelerates everything. In 1914, building alternative financial systems took decades. You needed physical bank branches, telegraph networks, correspondent relationships. Today, you can scale a digital payment system from zero to billions of dollars in months. China's CIPS went from processing $12 trillion annually in 2020 to $27 trillion in 2023. That's more than doubling in 3 years. This kind of exponential scaling wasn't possible in 1914, so the decline might actually be faster than Britain's despite the U.S. starting from a stronger position. My calculation based on historical precedent and current acceleration, the dollar loses majority reserve status, meaning it falls below 50%. Somewhere between 2037 and 2042, that's 15 to 20 years from the 2022 reserves freeze. The dollar won't disappear. It'll still be a major currency, maybe 35 to 40% of reserves, but it won't be dominant. It won't have exorbitant privilege. The U.S. will be one of several major currencies in a multipolar system, and that changes everything. About American power and prosperity, let me show you what this means practically for the United States and for you personally. Right now, the U.S. federal government runs deficits of $1.50 to $2 trillion per year. This is sustainable only because foreign countries buy U.S. Treasury bonds to get dollars for trade and reserves. If you're China or Japan or Saudi Arabia and you need dollars, you buy treasuries. This creates artificial demand that keeps U.S. interest rates low. The U.S. can borrow $2 trillion per year at 4% interest instead of 8% or 10%. That difference is worth hundreds of billions per year. But when countries stop accumulating dollar reserves, they stop buying treasuries in massive quantities. Demand falls, interest rates rise. Suddenly the U.S. can't afford to borrow $2 trillion per year. The deficit must shrink. That means either massive spending cuts or massive tax increases. The American standard of living, which depends on government deficit spending to fund everything from Social Security to military to infrastructure, becomes unsustainable. The free lunch ends. Second, the U.S. currently imports about $3.8 trillion in goods per year and exports about $3 trillion. That's an $800 billion trade deficit. The U.S. consumes more than it produces. This works only because foreigners accept dollars as payment. The U.S. essentially prints dollars and exchanges them for real goods from China, Vietnam, Mexico, everywhere. It's an incredible deal. But when the dollar loses reserve status, foreigners don't want excess dollars anymore. They want to be paid in yuan or euros or gold or their own currency. The U.S. can't just print money to pay for imports. The U.S. must actually export goods of equal value. That means either the U.S. exports more, which requires rebuilding manufacturing that was outsourced over 40 years, or the U.S. imports less, which means fewer goods, higher prices, lower living standards. Either way, the average American consumer gets poorer. Third, the U.S. dollar's value relative to other currencies will decline. This is already happening. In 2022, $1 bought about 6.7 Chinese yuan. By late 2024, $1 buys about 7.2 yuan. That's a 7% decline in 2 years, as dollar reserve status erodes further. This accelerates. By 2030, $1 might buy 5 yuan. By 2035, maybe 4 yuan. If you're an American traveling abroad, everything becomes more expensive. If you're buying imported goods, everything becomes more expensive. If you hold dollar-denominated savings, your wealth declines relative to people holding yuan or euros or gold. This is a slow-motion devaluation that has already begun and will accelerate over the next 15 years. Fourth, inflation becomes structural. When the dollar was the reserve currency, the U.S. could export inflation, print too many dollars. Foreigners absorb the excess through reserve accumulation. But when foreigners don't want dollars, excess dollars stay in the U.S. economy, chasing goods, causing price increases. The Federal Reserve loses the ability to manage inflation through interest rates alone. Inflation stays persistently high, 5 to 8% annually. Despite Fed efforts, your salary might go up 3% per year, but prices go up 6%, so you're getting poorer every year. This is the lived experience of reserve currency decline. It doesn't happen overnight. It happens slowly, steadily, year after year, until one day you realize that what your parents could afford with a middle-class salary, you can't afford anymore. That's dollar reserve status loss showing up in your personal finances. Now, let me show you who benefits from this and who gets destroyed. Because the $300 billion freeze created clear winners and losers, the obvious winner is China. China is the second largest economy. China is the largest trading nation. China is the largest manufacturer. China is the largest creditor nation. As the dollar declines, the yuan rises to fill the vacuum. China doesn't need to militarily defeat the United States. China doesn't need to outspend the U.S. on aircraft carriers. China just needs to wait while the U.S. destroys its own currency through financial weaponization. And China is actively accelerating this process. China is offering yuan swap lines to 40 countries. China is building CIPS to rival SWIFT. China is settling oil trades in yuan. China is accumulating gold. China is leading BRICS expansion. Every move China makes is designed to position the yuan as the alternative reserve currency, and it's working. The yuan's share of global reserves has tripled from 1.2% in 2016 to over 3% in 2024. That sounds small, but it's the fastest growing reserve currency in history. If yuan share grows from 3% to 15% by 2035, which is entirely possible, that's a $1.5 trillion shift out of dollars into yuan. China becomes the center of global finance. The US becomes peripheral. Russia wins strategically even though Russia was the target of the sanctions. Russia's economy contracted in 2022. But it's growing again. Russian GDP grew 3.6% in 2023, faster than Germany, faster than the UK. Russian oil exports are at near record highs despite sanctions. How? Russia redirected exports to China, India, and the Middle East. Russia settled trades in yuan, rubles, rupees. Russia proved that you can be cut off from the dollar system and survive. This is the demonstration effect. Every country that feared US financial power now knows there's an alternative. You can trade with China, Russia, India, BRICS nations. You don't need dollars. You don't need SWIFT. Russia's survival destroyed the myth of dollar omnipotence, and Russia strengthened relationships with China and India. Russia is now the energy supplier to Asia, replacing some Middle Eastern oil. Russia has leverage it didn't have before. The sanctions didn't destroy Russia, they repositioned Russia as the leader of the anti-dollar bloc. The BRICS nations all win: Brazil, India, South Africa, and the new members, Saudi Arabia, UAE, Egypt, Iran, Ethiopia. These countries gain autonomy. They're no longer trapped in dollar dependence. They can trade in local currencies. They can play the US and China against each other. They have leverage. India is the clearest example. India maintained relations with Russia despite US pressure. India bought Russian oil at 30% discounts. India settled in rupees. India faced no serious consequences. This is the future for middle powers. More autonomy, less US dominance. Better deals. India's economy is booming partly because of cheap Russian energy. India wins. Saudi Arabia joined BRICS in 2024. Saudi Arabia is accepting yuan for oil. This was unthinkable 5 years ago. Saudi Arabia was a US vassal state. Now Saudi Arabia is hedging between the US and China. Saudi Arabia wins flexibility and better terms from both sides. Gold holders win massively. If you bought gold in February 2022, you've outperformed the stock market. Gold went from $1,900 per ounce in early 2022 to over $2,600 per ounce by late 2024. That's 37% return in less than 3 years. Gold will likely hit $3,500 by 2027, $5,000 by 2030. As central banks continue buying and dollar reserves decline, gold becomes the only truly neutral reserve asset. Gold wins. Now, who loses? The United States loses hegemony, gradually but irreversibly. The dollar's reserve status is the foundation of American empire. As it erodes, all advantages disappear. The US can't run unlimited deficits. The US military becomes unaffordable without cheap borrowing. US living standards fall relative to the rest of the world. The US doesn't become poor, but the US becomes normal. A large, rich country, but not the hyperpower, not the hegemon, not the empire, just another country. This is a psychological blow that Americans are completely unprepared for. The entire American identity since 1945 has been based on being number one, being the indispensable nation, being the global superpower. That era is ending, and the $300 billion freeze was the moment it became irreversible. Europe loses alongside the US. European countries join the sanctions. They froze Russian reserves. They cut Russia off from SWIFT. This aligned Europe with US policy. But it also tied Europe to dollar decline. The euro could have been a viable alternative to the dollar, but Europe subordinated itself to US leadership. As the dollar declines, the euro doesn't automatically rise. The yuan rises. Europe becomes economically subordinate to both the US and China. European living standards stagnate. European geopolitical influence fades. Europe becomes a museum. Rich in history and architecture, poor in dynamism and power, American consumers lose purchasing power. The U.S. trade deficit means Americans consume more than they produce. As the dollar weakens, imports become expensive. Everything at Walmart that says made in China doubles in price over 10 years. Your salary doesn't keep up. You get poorer. This is already starting. Inflation from 2021 to 2023 destroyed savings. Prices went up 20%. Wages went up 10%. That's a 10% decline in real purchasing power. And that was just the beginning. Over the next 15 years, dollar holders lose 30 to 50% of purchasing power as the currency declines. If you're holding dollars, you're holding a melting ice cube. Dollar-denominated assets lose value. If you own U.S. Treasury bonds, you're getting 4% interest while inflation runs at 6% and the dollar depreciates 3% per year against other currencies. That's a negative 5% real return. Bonds are a terrible investment in a declining reserve currency. Stocks denominated in dollars also suffer. Sure, the S&P 500 might go up 8% nominally. But if the dollar loses 5% against other currencies, your real international purchasing power only went up 3%. Foreign investors are already pulling money out of U.S. stocks and bonds. This accelerates as dollar decline becomes obvious. The American middle class loses the most. The wealthy can diversify into foreign assets, gold, real estate, international stocks. The middle class holds most of their wealth in dollars, in a home denominated in dollars, and a 401k invested in dollar assets. As the dollar declines, middle class wealth evaporates. This is how reserve currency loss shows up domestically. It's not a crisis. It's not a collapse. It's a slow grind where every year you're a little poorer than the year before. And you don't quite understand why, because the news says the economy is fine. But your lived experience is declining living standards. That's dollar reserve status death. Now let me bring this back to the core thesis. The $300 billion freeze wasn't a weapon aimed at Russia. It was a weapon aimed at the dollar itself. Because financial power only works when people trust the system. The moment you weaponize the system, you destroy the trust. And without trust, the system collapses. The U.S. could have maintained dollar dominance through economic strength, free trade, open markets, and rule of law. Instead, the U.S. chose financial coercion, freeze assets, cut off SWIFT, use the dollar as a tool of punishment. This worked tactically against small countries. Iran in 2012, Venezuela, North Korea, but against Russia, a major economy with alternatives, it backfired spectacularly. And the backfire is systemic. It's not just Russia leaving the dollar system. It's 50 countries diversifying away. It's central banks buying gold at record rates. It's BRICS building alternative infrastructure. It's the yuan replacing the dollar in trade settlement. It's the entire architecture of American financial dominance crumbling because trust is gone. The tragedy is this was completely predictable. Britain did the exact same thing in 1914. Britain weaponized finance. Britain lost reserve status. By 1944, the pattern was clear, but American policymakers didn't study history. They didn't understand that financial weapons backfire. They thought freezing $300 billion would cripple Russia. Instead, it crippled the dollar. And here's the ultimate irony. Russia's economy didn't collapse. Russia found alternatives. Russia strengthened ties with China and India. Russia is fine, but the dollar's reserve status is dying. The freeze hurt America more than it hurt Russia. This is what happens when you use weapons you don't understand. The collateral damage is your own power. Let me end with a timeline and a warning. Based on historical precedent and current data, here's what the next 20 years look like. By 2027, dollar's share of global reserves falls to 55%. Central banks continue record gold purchases. Yuan share rises to 5%. BRICS payment system launches. By 2030, dollar share falls to 52%. This is the psychological breaking point. Once the dollar falls below 55%, the decline accelerates because it's no longer seen as inevitable. Countries rush to diversify before everyone else does. Classic bank run dynamics. By 2035, dollar share falls to 48%. This is loss of majority status. The dollar is no longer the dominant reserve currency. It's one of several major currencies. Yuan is at 15%, Euro at 20%, gold and others at 17%. By 2040, dollar share stabilizes around 35 to 40%. The US is still a major economy. The dollar is still important, but exorbitant privilege is gone. But free lunch is over. America must live within its means. This is a 15 to 20-year transition from 2020 to 2037 to 2042. Not overnight collapse, gradual, irreversible decline. And here's the warning. If you're holding wealth in dollar-denominated bonds, in dollar savings accounts, you're holding a depreciating asset. Over the next 15 years, your purchasing power will decline 30 to 50%. This is predictable. This is math. Diversify now. Buy gold. Buy foreign assets. Buy real estate. Buy anything that isn't pure dollars. Don't wait for the mainstream media to tell you this is happening. By the time CNBC admits the dollar is losing reserve status, it'll be too late to protect yourself. The smart money is already moving. Central banks are buying gold. Billionaires are buying foreign real estate. Sovereign wealth funds are diversifying into yuan and euros. You should be doing the same on whatever scale you can afford. 1 ounce of gold. A small position in foreign currency. Anything to reduce dollar concentration. The $300 billion freeze was the trigger. The pattern is clear. The timeline is set. The dollar's reserve status is ending, not because of Chinese aggression, not because of military defeat, but because of American policy. The US had the golden goose, and it strangled it with sanctions. Welcome to the post-dollar world. It's not here yet, but it's coming. And when historians look back, they'll point to February 28, 2022 as the moment American financial dominance died. They just didn't know it at the time. Now you do.